Welcome to This Explainer. Today, we're diving straight into the annual Family Wealth Review. Managing multi-generational wealth is incredibly complex. Between operating businesses, managing global portfolios, and navigating intricate estates, things can easily drift out of alignment. So, we're going to look at a structured framework designed to keep your family's financial engine running absolutely perfectly. Let's get right into it. Here is the big question. Your family's wealth can change every single year, but when was the very last time you reviewed the entire picture? Life events and market shifts, they're constant, right? If you aren't stepping back and looking at the whole landscape on a regular basis, well, you're essentially driving blindfolded. And nobody wants to do that. The reality is, families often review their investments totally separately from their taxes, and their taxes separately from their insurance. It's the status quo. But the much bigger risk here is failing to look at the entire picture altogether. Because when your advisory team operates in these isolated silos, your assets become fragmented. And what does that lead to? Operational inefficiencies and some seriously costly misalignments. So how do we solve this? You really need a comprehensive 7-point diagnostic check. Number 1, assets. Basically, what do we own and what do we owe? 2, investments. Is our allocation and performance actually aligned with our long-term goals? 3 is tax. What liabilities or even planning opportunities like those 2026 exclusions are coming down the pike? 4, insurance. Is our umbrella coverage and protection still adequate? 5 is estate planning. Are the wills, trusts, and digital assets fully current? 6 is family. Are the next generation decision makers truly prepared to step up? And finally, number 7, succession. What exactly happens to the business and the wealth when leadership transitions? The secret here is you absolutely must look at all 7 of these pieces together, like one giant puzzle. Let's look at a practical example. Take a hypothetical family, let's call them the Sterlings. During their unified review, they discovered 4 major vulnerabilities just hiding in plain sight. We're talking concentrated legacy investments causing unintended market volatility, outdated insurance with restrictive sublimits exposing them to out-of-pocket losses, a surprisingly old will that presented massive probate risks, and a huge succession gap. The beauty of an annual review is that it catches these exact types of issues and lets you put a systematic fix in place long before they turn into full-blown emergencies. Okay, so here is the action plan to actually get this done and keep your momentum going. It's a simple 5-step process. First, you review the landscape by assessing those 7 points. Next, you identify the gaps, really dig in and find those vulnerabilities. Third, you decide and align on a unified strategy with your team. Fourth, document everything by assigning very specific task owners so nothing falls through the cracks. And finally, step 5, you seamlessly implement the plan. If you take nothing else away from this, remember this crucial point. Managing family wealth is absolutely not a one-time exercise. Your strategy needs to evolve right alongside the markets, the tax codes, your assets, and of course, your ever-changing family circumstances. Basically, if your plan is static, it's stagnating. Build wealth, review it, protect it, and pass it on. That is the true life cycle of multi-generational success. And just a quick reminder, this explainer is strictly for educational purposes. It is not financial, tax, legal, or investment advice. Thank you so much for joining me today. Now go get that annual family meeting scheduled and ensure your legacy is protected for the long haul.